Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. I am here with Robert Kientz of goldsilverpros.com. Robert, thank you for coming on the show.
Absolutely. Thanks for having me.
Yes. Okay. So tell us a little bit about your website, what you study gold and silver almost exclusively, right?
Yeah. Long-term stories. I used to be in tech for 25 years, have a master's in cybersecurity, did audit work, did a lot of tech work. About 12 years ago, I got laid off, the only time I've ever been laid off. And I wanted to take a look at the economy. So I studied Austrian economics and got into gold and silver, wrote for many, many years. A bunch of friends said, hey man, you need to get on social media and tell your story, so I did. And so we run Gold Silver Pros. Goldsilverpros.com is our website, but really we're out on social media, YouTube, Twitter, TikTok, all that kind of stuff.
Okay. And so for a guy that's just getting into gold and silver, you'd probably recommend the bullion first, or?
Yeah, honestly, it's the easiest way to get into it. There's less to learn. I mean, there's a lot of information there, but really all you got to learn are four things. You got to learn spot price, which is what you pay instantaneous settlement, but at your dealer you pay something, the market up with premium, which is the cost of the supply chain to get it to them, plus how good they are at negotiating their contracts.
Yeah.
And then you need to look at diversification, what types of products in there you want, and then you look at who you trust. What's the dealer you trust? Those are the only four things you really have to worry about. I got a video out on my website for that, as well as I write for jmbullion.com. There's an article on jmbullion.com for that as well. Other products you can get into, collectible coins or the mining stocks, both of those have more risk and require more expertise. So I would say yes, I would start with the bullion at first. Think about, however, moving into some of those other investments if you're looking for more return. Just know that with return comes risk. So just be careful that you're not getting yourself too far down the risk trail, too much risk in your portfolio without knowing what you're getting into.
Yeah.
So those types of markets take a little bit more research and discovery. So I'd recommend, yes, do the bullion first, get comfortable with it, study it, and then when you're ready, you can jump into some of those other more advanced things.
Yeah, what I've noticed, I only got into this a few years ago, but the bullion price for me has essentially kind of flatlined. But the miners, like Newmont, Barrick, they seem to be a 2 or 3x up or down, right? And then when you get into the junior miners, now they're a 2 or 3x of the majors. Is that an accurate statement?
Yeah, so what happens with the majors is, if you think about gold and silver, you're digging it out of the ground,
Yeah.
so you always have a depreciating asset.
Yeah.
You always have less.
Yeah.
And what the majors have to do in order to maintain their balance sheets and their investment, they got to have cash flow to support the stock, they got to give away a little bit in dividends so they become like a utility, because the price just doesn't go straight up anymore. They're at their plateau.
Yeah.
So what they're trying to do is pay a little dividends, nice strong price appreciation, and they become like the utility stocks in people's portfolio in the gold and silver sector. You're going to have the big blow-off tops in those. Unless you have a massive gold run, then you will, or massive silver run.
Yeah.
But they're always having to replace their ounces, so they got to go to the juniors. So they got to buy it off the juniors or go do their own exploration. That costs a lot of money. So it's very expensive for each additional ounce to add to that major stack.
Yeah.
So the majors aren't going to have that big price appreciation. However, the juniors will, because they got leverage to that price, and they have a bunch of asset that's not been mined yet, and then a major is going to go, ooh, I want that one.
Yeah.
And so a lot of times a major will go buy out the exploration play. The exploration stock investors are happy because they get a nice bump. They get a 10, 20, 30% bump, whatever it is, depending on the deal, and they can sell their stock right away, or they can take the stock of the bigger company and maintain it like a utility or an insurance stock.
Yeah.
So you got some optionality there. So I do think the majors are good to have like portfolio stabilizers, but honestly, if I'm going for a portfolio stabilizer, I go for the metal, I don't go for the majors. So I personally don't invest in the majors. I'd rather have the metal, personally.
Okay.
But a lot of funds do. If you get your 401ks, your ETFs, they invest in the majors. That's where the money goes. Because out of the mining sector, only the majors trade on the big New York and the big American stock exchanges.
Yeah.
So you'll get the money there. The thing about the juniors, the reason they wait so long is because they're not getting that passive income. But when gold and silver goes up big time, you get major leverage, sometimes 5, 10, 15, 20 times. We've seen that many times.
Yeah.
Not all of them, but the really good ones will get that really big leverage play.
Yeah.
And then the majors get really interested and they go gobble them all up.
Yeah.
And that's what happens.
Yeah. What other bets are you placing other than gold and silver? Uranium?
I'm big on uranium. You and I talked about uranium quite a bit. I love uranium because it's the only base load power which is super reliable. If you look at wind and solar, they don't output as much per dollar spent, not as many kilowatt hours. When I was in the big polar freeze we call Snowmageddon in Texas 2 years ago, we got 50-year lows in temperatures. That's a lot for us. We don't get a lot of freezing weather, especially down in Austin. It almost never freezes there. My daughter and I were down there. She was filming a TV show. We got stuck at the hotel. We had no power, no electricity, no food. No gas stations were open, no grocery stores were open, and it's 9 degrees outside, and we're huddled in blankets. my next door neighbor has a 3-month-old baby with no baby formula.
Wow.
And we're like, whoa. The reason why, Texas the last 20 years has put a lot into wind and solar. They all froze up. Didn't work. The natural gas, because it wasn't winterized, froze up. The only thing that withstood the weather was uranium, and that kept a lot of people from dying. It kept the hospitals open, it kept the police stations open, and it kept the rest of the state running. So without uranium, it's bad when you have weather events. Plus, uranium meets all the ESG requirements for no carbon, and it's really the only baseload power that you can have across the world. Kind of ticks all the boxes that all the governments want, secures energy security for the citizens, and we have enough uranium and eventually thorium when we get there to power us for the next few hundred years.
Yeah.
So I'm huge on uranium, and uranium prices doubled the last couple of years. It's already in its bull market. It's going to keep going.
Yeah,
I think.
I think so too.
Yeah.
I think so too. Rick Rule says that either the price of uranium goes up or the lights go out.
That's 100%
Right?
correct. We need at least $80 uranium in the U.S. at least to get some of these projects started.
And right now we're at 50.
They're at 50,
Yeah.
and if you look at uranium demand, it's going to go up by 2.3 times in 2050, current projections.
Wow.
And so that uranium price is going to run for a long time. It's going to be a long, nice bull market for uranium, I believe.
Yeah,
Yeah.
I believe so too. I'm betting on it.
Yeah.
Literally.
Yeah, we all are. We'll see what happens.
Yes. Real quick, how do you feel about copper?
I like copper a lot. Copper is in a huge supply deficit long term. Now, the problem with copper is it's done very well.
Yeah.
I think 14-year high we hit in the last couple of years
Yeah.
is done very well. But if we hit recession, copper goes down for the time being. If we hit geopolitical conflict, it goes way up, because what do they use in the machines and the stuff? Copper, steel, all that kind of stuff. So depending on what happens in the world, it could go down or up. But when we hit the next big build cycle, copper's going to go bonkers, because you have the Chinese trying to develop a middle class, the Indians, and if you look at all the emerging economies that want to build their middle class, we need 10 times the amount of copper that we currently know that we have. And that could be a blow-off top market.
Yeah.
Not right away, maybe a few years, but that thing is going. When it goes, it's going to go hard.
Yeah.
Because you cannot have industrialization of the world without it. You just cannot have it.
Yeah.
And ESG initiatives for renewable electricity requires massive amounts of copper and silver. You're not getting ESG initiatives without copper and silver. It's not going to happen.
Yeah.
So both of those will do very well.
Awesome, awesome. Okay, goldsilverpros.com.
Yes.
You got your YouTube channel with the same name.
Yes.
Thank you very much, Robert.
Yes, sir. Thank
this
you.
has been a pleasure. And hit the like and subscribe, and we will talk to you next time.